Hello again, Matt Long here with the Second Mile Group and eXp Realty. Last of our video sessions here about kind of the 101 purchase contract documents, etc. This one we're going to go over the additional clause addendum, which covers a lot of different things. But even at that, it's rarely used. I can probably count on one hand the number of times I've used this addendum since it's been available. So we'll go over it, but don't necessarily expect this to be something you're using all the time. As such, when we built our template, we didn't include it here in the forms. So we're going to need to add it. So to do that, you're on your home screen of your transaction with this client. Over here, Forms pops up. You click this arrow. Not arrow, plus sign. And then up here in the search bar, start typing and it'll fill in. And you click the circle, hit add, and now it pops up here. Again, similar to the buyer contingency addendum, this is located to incorporate it into the purchase contract. It's located on the first page, section 1F, checkbox. Now additional clause is in play. So very straightforward to get it included into the offer. If you use this on a purchase, expect questions from the listing agent. Not a lot of people come across this. So this is used for multiple different scenarios to keep you from writing information about an offer that you really shouldn't be doing. You know, if as an example, if you're going to make a backup offer and you're going to take all this verbiage and rewrite it on your own and put it in section 8 of the purchase contract, in reality, you just practiced law without an attorney's license, and that's a bad idea. So that's what this is for, is to keep your nose clean. And when something like this comes up that comes into play, use the form that the AAR and their attorneys have approved. Because we're not attorneys. We're able to fill out these contracts, but we're not supposed to be generating all this information. So here we've got seller, buyer, property, date. Again, that's the date you're making the offer. And lines 5 through 8 basically say, hey, only the thing that's marked with an X actually applies to the situation. And it needs to be not only marked with an X, but also initialed here by everybody. That way people aren't thinking everything's included. It's only what's marked with an X in its big checkbox here. So first thing, we're just going to go down this in order. First thing on here is backup contract, contingent upon cancellation of prior contract. So not uncommon in this market, property's under contract, your buyer wrote an offer, didn't get it, they want to be a backup, or they know it's under contract, they want to write a backup anyway. This is doing that, and this is creating the verbiage. Buyer acknowledges that seller is currently obligated by a prior contract to sell the premises to another buyer. This is a backup contract contingent upon cancellation of the prior contract. Some of us might be tempted to end there. This is why we have attorneys do this, because it continues. Seller retains the right to amend, extend, or modify the prior contract. Upon cancellation of the prior contract, seller shall promptly deliver written notice to buyer. Upon buyer's receipt of written notice of cancellation of the prior contract, buyer shall open escrow and deposit any required earnest money. The date of seller's written notice to buyer shall be deemed the date of contract acceptance for purposes of all applicable contract time periods. Buyer may cancel this backup contract any time prior to receipt of seller's notice of cancellation of prior contract. Notice it doesn't say like how, it just says you can cancel it. So in theory, you could send a text, we're canceling. You can send an email, we're canceling. Email would be best, phone call would be best. make sure all that stuff is tracked. But at any rate, I'm sure that covers more than most of us would be thinking about in terms of covering our clients if they want to be a backup. So if it's a backup, you check mark here, your buyer initials there, you send it over. Now the seller can accept everything they initial here and everyone knows it's a backup. All right, next thing we're going over, signature of absent buyer, spouse, or co-buyer. Signing buyer shall within 5 days of acceptance of this contract obtain the signature of the absent buyer, spouse, or co-buyer on this contract or deliver a disclaimer deed to escrow that eliminates the need for the absent signature. With e-signatures, this isn't as common because you can email it to someone wherever they are, so they should be able to sign it. But if you have people that aren't able to do the e-signature for whatever reason, and only one can, but there's two parties, you're going to use this to say, hey, there's two people buying, I can only get one signature. We don't want to wait for the other person to show up. I'll have it to you within 5 days. So that's what that's saying. Corporate relocation approval. Seller is in the process of corporate relocation, and this contract is contingent upon corporate approval. Buyer agrees to cooperate with seller in providing additional disclosures or executing additional addenda required by corporation, provided that buyer incurs no additional costs or liability. So right now, there's a lot of corporations moving from California to here. So in California, a lot of listings are corporate relocation listings, so this would come into play. There's not a whole lot of corporate relocation going on out of Phoenix right now, but if you come across it in a listing and it says this is a corporate relocation, find out from the seller listing agent what all do we need? What do we need to do to make sure that corporate relocation goes well? And it could be you need to include this. Non-refundable earnest money. So right now, it's very common for a buyer to be like, look, they can have my earnest money. If my earnest money goes hard, my earnest money is non-refundable. Well, believe it or not, that phrase means a lot of different things to a lot of different people. And that is when you get in trouble. So you want to use this document when your buyer says, you know what, I'll make my earnest money hard if that's what it takes to get this house. This document defines what does that actually mean. Buyer's earnest money shall be non-refundable unless buyer elects to cancel pursuant to the due diligence section of the contract. The contract is canceled pursuant to the risk of loss provision or escrow fails to close due to seller's breach of contract. Buyer acknowledges that buyer's earnest money shall be non-refundable even if the premises fail to appraise for the sales price or the loan contingency is unfulfilled, unless otherwise prohibited by federal law. So, unless otherwise prohibited by federal law, VA loans, buyers are not allowed to make their earnest money non-refundable. Whether the contract says it or not, they're just not allowed to. There's some debate in the FHA world if that's true or not. I haven't run across it. So, again, this is much better than you just writing, buyer's earnest money shall be non-refundable, period, in Section 8. You just missed out on a whole bunch of stuff that this would have helped you protect you from. Waiver of appraisal. This is another thing that a lot of buyers are wanting to do right now. I'll waive my appraisal. I'll pay over whatever. Not necessarily the greatest idea, but sometimes clients got to do what they got to do. So buyer agrees to waive the appraisal contingency pursuant to the financing section of the contract. In the event the premises fail to appraise for at least the sales price, buyer agrees that buyer's down payment shall be increased in an amount equal to the difference between the appraised value and the purchase price. I would not recommend doing it this way. If you have a client who wants to pay over appraised value or wants to waive the appraisal, I would cap it at a certain dollar amount. And if you're going to do that, contact Josh or I and we'll talk to you about how. All cash sale appraisal contingency. So I've had this once. I had a buyer paying all cash, but they still wanted it to be contingent on an appraisal. So in the purchase offer, when you click the "This is an all cash" button, it says skip section 2. So section 2, which is the financing section, doesn't apply in a traditional cash situation, and that's where the appraisal contingency is found. So if you want it to be still contingent on an appraisal, you need to include this. Frankly, you kind of lose the power of a cash purchase if you do that, but it is what it is. Buyer's obligation to complete this all-cash sale is contingent upon an appraisal of the premises for at least the purchase price. If the premises fail to appraise for the purchase price, buyer has 5 days after notice of the appraised value, or 20 days after contract acceptance, whichever occurs first, to cancel this contract and receive a return of the earnest money, or the appraisal contingency shall be waived. In all cases, this appraisal contingency shall expire 20 days after contract acceptance, regardless of whether an appraisal has been ordered or received. Appraisal fee shall be paid by, and I would most definitely in this case say the buyer is going to pay that because the buyer is who wants it. Again, I've only had that come up once, but it has come up. Survey. This would be a little bit more for if you were selling vacant land, or maybe if it was a house on a whole bunch of property, a bunch of acreage. A survey shall be performed by a licensed surveyor within, I would put 20 personally, days of contract acceptance. Cost of the survey shall be paid by the buyer. The survey shall be performed in accordance with the Arizona State Board of Technical Registration's Arizona Land Boundary Survey Minimum Standards, and the survey will include just a simple boundary survey, making sure that the lot lines are not in dispute. So if you're out in a county island and you feel like the neighbor built their wall on the property line, you might want to get a survey. And then also you can get a survey certified by a licensed surveyor acceptable to buyer and the title company in sufficient detail for an ALTA title policy, utility lines, easements within 5 feet thereof. So this would be more like, hey, I just kind of want to know, I'm curious. This would be more like, I'm pretty sure we've got an encroachment going on and we need to get this remedied, and you'd order this. This is something I have never used on a residential purchase. I've used it on lot purchases, but not on a residential purchase. Tax deferred exchange. If your client is doing a 1031 exchange, either way, you need to disclose that, enter into a tax deferred exchange pursuant to IRC 1031 or otherwise. All additional costs in connection with any such tax deferred exchange shall be borne by the party requesting the exchange. So if your buyer is using it, they're going to pay. If your seller is using it, they're going to pay. The non-requesting party agrees to cooperate in the tax-deferred exchange, provided that the non-requesting party incurs no additional costs and close of escrow is not delayed. The parties are advised to consult a professional tax advisor regarding the advisability of any such exchange. The non-requesting party and brokers shall be indemnified and held harmless from any liability that may arise from participating in the tax-deferred exchange. So 1031 exchanges, that's where you've got an investor who's selling a property. They don't want to pay their taxes right now. They want to use all their proceeds to buy the next house, so they're deferring their tax payment later. There's all sorts of rules in terms of when you have to identify which property you want to buy, when you need to close on that property. You need to use a third-party 1031 exchange company to help facilitate all of that. That is not the title company. So I guess in reality that's a fourth party. So a lot comes into play when you're doing that. This is a disclosure telling everyone that you're doing it. Water. Actually, I have never read this one, so we're all about to learn something. Arizona is undertaking general stream, add that word, of both the Gila River and Little Colorado River systems, which are court proceedings to determine water rights. If the premises property is affected by that, the property shall execute and file an assignment of statement of claimant form, and buyer shall pay any associated filing fees. So this must be if the property was getting water from these directly systems. Apparently there's a lawsuit going on of some sort, and everyone needs to know about that. That I've never used, I've never even read it. So that is the brief overview of the additional clause addendum. Good to know what's in here so that when these situations come up, you can use it instead of getting yourself in trouble by writing all this same verbiage on your own and screwing something up. All right, that is that, and that is the last of our writing a purchase offer entry-level courses. So we'll start working on our level 200 best practices type stuff and get those posted as we can. All right, thanks.